Gable May, Hawaii VA Loans, 3-Minute Thursdays. We like to drop knowledge in 3-minute segments here. So today we're going to talk about one of the most important parts of a purchase transaction, and that is the appraisal. More specifically, what happens if your appraised value comes in low? So we got T. Iwaishi, VA Loan Specialist, Hawaii VA Loans. So T, we got $500,000 purchase price. Appraised value comes in at $490,000. What happens?
So basically, first off, when it comes to lending money, the bank is only going to lend on the lesser of these two. So sales price or appraised value. So whichever is lower is what the bank's going to base their loan off of.
Okay, so in this instance, came in 10 grand low. What's one of the options?
So basically, there's one of three options. So option number one, the buyer can make up the shortage in the difference between the sales price versus appraised value. So $500,000 sales price, $490,000 appraised value. The buyer can come in with an extra $10,000 at closing to make up that shortage.
That's never fun for the buyer having to come in with extra money, but there is another option, right?
Yep. Option two, seller can drop the purchase price down. So to make up that shortage. So $500,000 original sales price, $490,000 appraised value. The seller can drop the sales price $10,000.
Okay, so that's the ideal situation for the borrower. But then there's one more last option, right?
Yeah. Option three, last option is the borrower or the buyer and the seller can meet halfway. So $10,000 shortage, each can come in with $5,000. So seller would drop the sales price by $5,000 to $495, and the buyer would come in with an extra $5,000 at closing.
Cool. So you got three different options now. You never want to have your appraised value come in low, but if it does, there's some options for you. T, great job.
Thanks.
That's 3-Minute Thursdays. Hope you guys learned something. See you guys again next week.